Welcome to the Trading Lounge and the Day Ahead Report, and here we're looking at the Dow Jones, and we're seeing the market up here. There's sort of three news events that are taking place. So obviously the oil with the Gaza situation is still fluctuating reasonably wildly, and still expect oil to go down. The Dow here is up based on better job figures coming through, but the Greece bailout is still looking pretty shaky. The US have got a holiday tonight in the US, Thanksgiving, so yeah, so we're a bit quiet there tonight. The pattern that we've been following through here is looking quite good at this stage. What we've got here, and we'll explore shortly, is that it appears that we've got a nice clean five-wave structure to the upside now. So what that will mean is that after 5 waves, which will make wave 1, we'll see a ABC correction back. How far will it come back is always the question. Normally wave 2 is normally sharp and swift, and it may be, created from the Greece situation. But it can come back 61.8% of this move here. So that textbook stuff, can come back in through to here, so it can come all the way back to 12.6 here. I know that little support there. It's possible to come back that far. It may only come back to the 38.2 retracement level, but what we have to do is we have to expect some type of correction in here. That's the main point here. So it's a time to trade less in that correction, but after this 5 waves here, after the correction, then we should get another 5 up to retest the 13,000 there. Also, it's kind of like I just call it the classic trading levels pattern, and that's got a few parts to it. It's good to understand is that you've got the arrival, the reaction, the support, then the first high above the level, and then you've got your corrective pattern from that point, so looking for support back on the 12.8 after that. So really it's just a corrective pattern going across the price there, with all the psychological implications unfolding with that. But just pulling that apart there, there's probably a couple of ways to counter all of this, but the main point is that we've got this 5-wave structure here, and also the other markets are like this as well. The S&P 500, the FTSE, the DAX, and even the ASX 200 is like this as well in its own little way. So all the markets are folding in together, so it's a reasonable example of everything. So kind of looking at this being, the main point here is that we've got the beginning of the trend, the strong part of the trend, which is the 3rd wave, and then we've got the 4th wave in here somewhere, and then we've got the 5th wave coming in through here. But as it stands, we've got the 1, the 2 here, and then we've got 5 waves up through here to make wave 3, and the wave 4 here, and the wave 5. Now look, I am concerned about the wave 4 here, because the wave 2 here was sharp and simple, so this one here should be sideways and complex. So I don't know, maybe somehow the wave 4's tied into here somewhere, and if I'm wrong, where I would be wrong would be this here, is that as far as I can see so far, we would have this up here as 5 waves, which will come a bit higher into here. But otherwise, if I'm wrong, it would be, this is where I'd be wrong. This would actually be from this point here. This would be wave, we're looking for the 5th wave here. So we would be wave 1 here, wave 2 here, wave 3 up to here, wave 4 and wave 5 up to here. Then we would have our A, B and C correction. Okay, so that's where I'd be wrong if I was wrong at all. Yeah, but yeah, the main thing is that it's positive. So we've got our 5 waves to the upside. Excuse me. Same with the S&P 500 as well, in terms of looking for our 5 waves up in through here, and that's what we can do here. So same sort of scenario through here as well. See the 3rd wave in the middle here. Somewhere in here is the 4th, and we're looking for the 5th now. So yeah, it's good news. At least we know where we are. The other day we weren't quite sure when we had this first little wave up here. We know that we're going to get another one, but we weren't sure about getting making this an ABC correction and then folding over from here, or getting the 5 waves in here and then getting our correction moving up. And if I'm wrong here as well, the wave 2 here will be the wave 1 here will be, I should take the A wave off there now, but the wave, the wave 1 will be into here. The wave 2 may even sort of really stick to the 1400 here. There is a lot of supply here, the resistance through here. So between the 1400 and also group 1 here, 10, 20, 30 is where the real resistance is going to be. But once again, positive to the upside. And the European markets are the same as well. Yep, so basically the same sort of picture as well. We've got the wave 1, wave 2, the wave 3, 4 and 5 coming up through here. So that should finish into the 72 there, which was our target. So if you're long from above the 7,000 here, then you certainly need to be covering fully into the 72 here. And the UK market would be the same as well. This is the UK market just on the 20 minutes, just something different. But once again, you can see the nice strong wave 3 here, and that would we'll just come back here, count this as we go. So we've got wave 1 here, wave 2 here, and then we've got wave 3 in here. Wave 3's got the extension in it, so that would be 1, 2, 3, 4 and 5 for the top of the 3rd wave, the A, the B and the C for the 4th wave, and we've got the 5th wave going up. Now the 5th wave won't go very far because the extension is in wave 3. So when you have the extension in wave 3, then waves 1 here and wave 5 will be about the same size. So my number here is the 5772. So that's that's always been sort of on the cards there. Nice support on the 72 here as well, but in the 572 here, all playing out quite nicely. So, but yeah, look, expecting a top here in line with the US markets, and this is the Australian market as well. A bit different to count to the upside, but what we can see here is we can see reasonably strong move within here. So we can look at that being the 3rd wave. We can see this being a complicated 4th wave here, and this would be the 5th wave moving up through here. So we wouldn't expect it to go too far. In fact, we'd be looking at a 1 and 2 into here. 3rd wave will be in here somewhere, 4th and 5th. And Thursday's in a bullish cycle. A Thursday's got the probability of opening higher, but then trading lower throughout the day. So just be aware of that. If it does trade lower throughout the day, will it be trading lower on lower volume? If we do see lower volume, then we know that we've got a bit of a bullish case in play here. So this is the cash market, the ASX 200 cash market here. Just bring this up here, and what we can see here is that we had a softer move yesterday, but it was also on lower volume as well. But as was the trends move, the 2 days moving up through here as well, they were on lower volume as well. So we knew that there was weakness there, and we could see that anyway in the futures market. So, but even coming down through here as well, we can see that nice long bar in here, and then basically it started to slow down and get smaller in through here, and also on lower volume into this point here. So basically we could see, you can see the turn in the market here, but the problem is it's still correcting through this space here, and the 44 being the 100 here. So the resistance through here, which as I've mentioned before as well, can certainly create like a head and shoulders situation with this bigger picture here as well. So, we're not seeing, we're seeing more of a corrective pattern here. We're not seeing the strength come in here just yet. So this could certainly be like a little wave 4 here and moving down further through here. So we're not seeing supporting volume come into this market just yet. So we need to be mindful of that. We're seeing the finance sector not moving to the upside as much as well. We know that from as we follow CBA a lot, and we've been short on the turn with the CBA. So we're not seeing that sort of strength come in there yet, and we're not seeing it from the commodity markets just yet either. So let's have a look at copper, quite central to the base metals. Okay, copper here. The bounce that we have off this low here does count quite nicely, as I mentioned yesterday, as an A and a B and a C wave here. Yes, I understand that. This is also in like 5 waves here, which makes it which is a possible C wave here, which would make this something like up for 1 here, an A and a B and a C here. So I do understand that it can be counted positively as well. I do understand that, but what we'll just work with, this is where the trading levels come in. The Elliott's good if you can nail the little sucker, but otherwise price becomes much more of a catalyst in making decisions. So the 350 here, the 55 being the second strongest number as support or resistance. And when I see a market correcting across a price point like this, is that I never go negative until I see that the price has actually rejected the price that it's working across, because when a price is sticking to it, it's actually a positive thing and it's just working through there. So in this case, yes, it has had a little retest through here. Let's just see how the second retest go, because if this finds support on the 350, then we've got something positive in the material sector, and of course that's important for for being long in the material sector, and we'll be looking to edge into that. So this will be our little early trigger for being long in the material sector. So, and the other thing too is that base metals and precious metals obviously have a relationship to some degree, and of course at different times, and they've both got different markets to adhere to. But there is a relationship there, and looking at the gold market here, that we've got a positive wave count on this, and what we've been looking for here is an impulse wave to the upside. And yes, I understand there's different ways to count the top here and so forth, but it still does count quite nicely as an impulse wave. So we're looking for wave 2 to come into play, and yes, the wave 2 could go into this section here as the corrective pattern, but I just wanted to allow this little B wave here to play out through here. So it's likely to fail at the 1730 through here, and then give us a C wave to the downside here. And it's not that we're going to miss much anyway, because look, if the 1730 here, the top of group 1, the 10, 20 and 30, Group 1, if we get support on that this time around, then we can go along from that point. So yes, you don't get the whole turn in the market here unless you've bought off the 72 here, but that's another story. Otherwise, we just need to wait for support to come in on the 1730 there, top of Group 1, which would be a safer bet, so to speak. Otherwise, we'll be looking at 5 waves down through here, and it would probably look something like this here, but this is, I don't know, this is quite big here for an A wave in relation to what could occur here. So, but look, anything can go here, but the main point is that we're looking for 5 waves up, a correction, and then further up. I just don't know if we're going to get one more in here, and I don't want you to get in here now and experience that move to the downside. So at least having support on the 30 here will give you a price point to work from. And silver's much the same as well over here. Oh, there we go. Silver's already popped up already, so that's good. It's obviously, as mentioned yesterday, is that the 5 waves up through here, and looking at the corrective pattern across here, across the 33, and then moving to the upside. So you'd be looking for, a bit late now, but looking for support on the next setup, which would be on the 33.30 here, the top of Group 1 here. Also working here as well is just, it's just a fine sort of refined point, I guess, but it's worth understanding, is that that 10, 20 and 30 is Group 1 here, and finding support on Group 1 separates the price thinking psychologically from the closest largest number, and people start to think of the other numbers, the 33.50 for instance, 5. But in taking a position in through here, we don't have support there just yet, but if you narrow it down further, we've got the top of group 1 here, which is 30, but then you've got the micro levels in there, so which would be 3, 1, 2, and 3. So 3, 3, 3, 3. That can also be a very valuable thing to understand and use that, especially when you're working with finer figures, like when you're working with, say, the S&P 500 and the Australian dollar and so forth, because it just makes, and the euro as well, it just gives you just another little layer, just another little edge in there. And being a numbers game, the further you understand them, the more they're going to be your friend. Okay, the oil market. A bit of the Gaza thing there, not that they've got sort of any oil there, but it certainly sort of upsets the Middle East there a little bit. The 86.50 is a support. If it's broken and becomes a resistance, expect the market back at the 85 here. But the general situation is as long as there's not too much influence from the outside, it should follow stock, and that would be to the upside. But if you're going to go to the upside, then wait for a decent setup that you understand coming into play, because as we see it at the moment, that little picture in here, this here is in a 3-wave price action, so we should see lows below that through here, and this is like a little 3rd wave down through here. So this ABC pattern here should produce a new low through here, but the 86.50 is not a sort of a common number as such, but it's a very important level. I call it 65, as you know, and really it's the midpoint between the 85 and the 88, and it just seems to play out nicely in oil all the time. So that's why I mentioned it. Yeah, alrighty, let's have a look at the FX and the all-important US dollar. Okay, the US dollar here, this is the daily chart here, and as you know, just for the bigger picture here, we're looking for the A wave, the B wave in 3, and the C wave up through here. We are considering that there's a top in play just here, and within that, if that's the case, we do, as you know, we've been working through this top for quite some time here. If that is the case, and we do start to see a move down through here, what it will do, it will really cement that low for, say, the US indices, the Dow Jones at 12,500, and we'll see a stronger move up to that side, and we're seeing that already with the first little 5 waves to the upside, aren't we? So we're kind of on track here. It'd just be nice to get some further confirmation from here. And we also need to look at both sides when we're using Elliott, especially when it can be a bit sort of iffy. So we will look at that as well. So in the point for a top being in play, we would be looking at it like this in terms of the top being in play here, and down for wave 1, and quite a nice sort of corrective pattern back to wave 2 here. Now that it's moved down here, it really makes that sort of a corrective pattern up through here. So we will see a lot more. We still need to see like 5 waves down, 3 waves back up, and then further edging down. But what we're looking for is eventually for the 81 to become the retested resistance, and the price rejecting this level here, but it's still got sessions to go. And as I mentioned earlier in the video today as well, is that when a price is actually working through a number and it's sticking to it, it's actually a positive thing because it hasn't let it go as such. So we've got to be mindful of that. So even though our bias is to the downside with the wave structure that we've got so far, we just need to be mindful that it's not over until it's over. And this move down through here could be an A and a B and a C wave coming down through here. And this is where the other count comes into play here. So if I just find this other one here, which is this one here, it's possible, of course, everything's possible, but so we'll be looking for a C wave up here of 5 of B here. So for the thing, so we'll basically be looking for the 1, the 2, the 3, and the 4, and the 5 here. And the if it's going to be a 4th wave, because 1 and 2 are simple, then 3 and 4 could be rather complex. So, and complex normally in the 1 and 2 here is where sort of the ABC zigzag corrections occur. But in wave 4, you get the flat corrections, you get the triangle corrections, the double zigzags and the triple zigzags and things like that. So it can get rather complicated here. So it's not going to be easy. We just need to be patient and work through it. But if at some stage in the future we do see this, rejected at 81 and the price moving, much further down, it's a clear sort of break there, then we know we can go long in at least the US stocks, and that will give us another layer of direction, of confidence in a direction as such. So that's important. Okay, so that's enough rambling on about that. The euro here, as you know, we're looking for the wave 1 up. We've got our little 5 waves there for wave 1 and wave 2, and we're looking for it to go further to the upside. But I also mentioned too that this can also be an A wave, a B wave, and a C wave here. But now that the price has made a new high here, then it really brings it back to being more of a positive structure to the upside. Okay, so that's good news as well. Just as good news that we worked out that the US indices to the upside was in 5 waves. So it's good. They all sort of start to fold in together now, and it's nice. So now there's a couple of ways to count this here. We could get once this little 5-wave structure is finished here, we can get just the normal A, B, and C wave down here, and then we can push up through here, and that's a likely case. The other case is that we get something a little bit like this here, a little bit bigger and messier in terms of same as the A, the B, and the C, but something just a little bit sort of larger occurring in through here. So just a bit of a wait and see really. But after this 1, 2, 3, 4, 5 finishes in here, there will be some type of correction here. But the good news is that don't get caught up in the correction because it's just too messy. But after the correction is finished in 3 waves, then we can look for support. We can look for support on the 128. That would be a safe bet there. If we want to get into early, we can use this number here, which will come into play more so, the 127.72 area here. But we can expect the price to stay above this particular low through here, this last low through here. So we can bring that into the midpoint here. So we'd expect the price to stay above the midpoint here. And realistically, would expect it to stay, it may spike down through here, but essentially maintaining this subgroup 2 here, area of support here. So the trades are long through here. I'm just pointing out that this little trend up through here will face some type of correction. It could be a very simple and small one, or it could be a larger one like this one here, big and ugly, so to speak. So I think sort of stand back from the button and just allow this to play out first. And the US have got a holiday, so there'll be probably lighter volumes in here as well, of course. And also we're expecting that pullback in the US indices from their little 5 waves up. So that will also play out on the euro as well. So they all should sort of fold in much together there. The Australian dollar here, let me just find out where we are through here. Oh, it's moved up already. That's good. Got to find my chart. Just have to bear with me for a second. This will do. Look, the move down through here, we're looking at this being a corrective move down through here. It does seem to be the case that it is corrective. We're just trying to find the low, and what we mentioned yesterday is we were looking for this little gap here to be filled. Obviously different providers will probably have different gaps there, but basically that little gap in through here, which come in around the 103.40, 42, or lower in some, higher in others, and that gap's filled nicely now. So this morning when I was first looking at this, I thought, oh, okay, right. And then I've mentioned the report that if we can, get support above, technically getting a break of this high here is the catalyst for the Elliott to move much higher, but we can't always wait around for things like that. So looking for the support on the midpoint here, but it's just sort of burned through that. So the next stage would be through the 72 here. So the 103.72. Just looking at this at the moment on the 20-minute here. Can I just get this on this one here on a 5-minute chart? Just have a little squizzy in here at this for a second. Yeah, look, it should slow down. It should slow down into here. There should be some type of correction into this area through here. So on the pullback, look to buy on the pullback. But when you're buying on the pullback, of course, always look for a price point to work with. So it'll probably have trouble in through here. But if it pulls back and drops below the 65 here, don't chase it then. Wait for it to get up on the 65 for support, okay? And then scale in there and then get a bit more on the top here. So as always, you want something to go, if that's a level through here, you want it to go through the level and then come back and get up there. It's got to prove to you that it's got support, because you need to know the exact price point to work from, and that way you can know exactly what price point to put the stop at. Yeah. Alrighty. Well, that's it, I think. So good morning, good luck, and enjoy the day ahead.